The Money Show
with Motheo Khoaripe
on 702. Let's walk the talk.
The Money Show with Stephen Pieterse is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening and welcome to the Wednesday edition of The Money Show. My name is Motheo Khoaripe, in for Stephen Pieterse. The major story today was, of course, at midday, Finance Minister Inoko Dongwana, flanked by his team, talking about the next budget that he needs to table, the third one, and hopefully third time lucky, the South African National Budget 3.0, if you like. Duncan Pieterse, the Director General of the National Treasury of South Africa, will be joining us for that conversation. What happens now leading up to that date? And then we'll be looking whether there will be the raising of funds for this particular budget or the cutting of some budget programs. Then Khaya Sithole, independent analyst, will give us some analysis around this particular budget. So that's what we start with here on The Money Show tonight. Then we'll have market commentary from Chris Stewart, portfolio manager at 91. The U.S. economy, the big story internationally, down 0.3% year on year. Largely on the major imports that came into the country ahead of these higher tariffs that came through from Donald Trump. He's saying it's the Biden administration's fault that the U.S. is in negative territory for the first 3 months of the year. We'll be talking to Chris Stewart about that and the rest of the market news that came through today. Then we'll talk at gold being a safe haven on the market. The World Gold Council, the Joe Cavatoni, market strategist for North America at the World Gold Council, talking to us about the insights from the Gold Demand Trends Report for the first quarter of 2025. Of course, the price of gold surging past $3,000 this year amid the economic uncertainty globally. Later on the show, we have Business Unusual, talking rethinking intelligence, the AGI conundrum, about the potential implications of artificial general intelligence and whether humanity's understanding of intelligence is overly narrow. That conversation with Richard Mulholland, founder of AI agency Too Many Robots and the author of Relentless Relevance. And then we have our Consumer Ninja Wendy Knowler to give us all the advice we need as consumers that listen to The Money Show. This time around, she's talking about insurers that can offload you as their client if you claim too much. I mean, if you pay your premiums, you should be able to claim, right? No. Your insurer can cut ties with you if, of course, you claim too much. We'll find out more about that from Wendy Knowler just after 7. Then our shapeshifter is Shireen Motara, the founder and CEO of The Next Chapter. All that and more on The Money Show tonight.
The Money Show with Motheo Khoaripe
On 702.
702.
Well, Treasury says it will table the national budget on the 21st of May. It's the third attempt after 2 previous budgets were rejected because of the unpopular value-added tax proposals. Finance Minister Inoko Dongwana saying the new budget will have to root out waste. And given that the Treasury already pays R1 billion a month for debt repayments, the budget will have to do more with less. Now, the Finance Minister hinted at trade-offs and budget cuts for the third budget, especially since he faces revenue shortfalls of 75 billion rand in the medium term. Now, Dongwana has ruled out any asset sales to raise money for the budget. He says the final budget will have to be a strong foundation for growth in order to boost investment and job creation. And when asked whether he'll resign, he says that is all up to the president. But now we talk to Duncan Pieterse, the Director General of the National Treasury of South Africa, about what happens next running up to the date, the 21st of May. Duncan, welcome to The Money Show.
Good evening, Motheo, and to your listeners.
Just take us through then, as we start, the process that will lead up to the tabling of the budget on the 21st of May. Are we starting at, from scratch, clean slate, or are you picking up from some of the procedures you've already gone through with the past 2 budgets?
Well, in terms of the technical process that we undertake, we run a standard technical process, which I'll detail shortly. But of course, in this case, there are elements of the budget that has been tabled that we are going to be able to retain. But in terms of the process, what we typically would do is we start with fiscal assumptions, mainly spending assumptions, and we feed that into a macroeconomic forecast. Now, one of the areas where we will need to update our estimates is in the macroeconomic forecast in particular, because as you can imagine, since we've tabled the last budget, global growth has been revised downwards, and several other high-frequency indicators that we typically use to compile our macroeconomic forecast will have changed. So we are producing a new macroeconomic forecast, feeding new fiscal assumptions into that process, and that then goes through an internal process where once the macroeconomic forecast is completed, our colleagues in the tax policy division then do the revenue estimates based on the tax bases contained in the macroeconomic forecast. From there, we develop the borrowing numbers or the debt strategy, and then that then goes back into the budget office to finalize the fiscal framework. Often, if the fiscal framework that is done after one round does not meet the fiscal goals that we set out for ourselves, we have to rerun the process that I've just mentioned, starting again with new fiscal assumptions until we get to a fiscal framework that meets the fiscal targets we've set for ourselves.
And is that doable in 4 months, or does that usually take longer?
Well, no, it will be. We have agreed with the Speaker of the National Assembly that we will be ready to table the new fiscal framework on the 21st of May. So we are currently busy finalizing that fiscal framework. There are a few other processes we need to go through as well beyond the internal technical processes, and that would include taking the fiscal framework back to Cabinet. It would include consultations with the FFC, and it will also include the Budget Council, which is where we engage the provinces, for example. And all of that will have to be done within the next few weeks ahead of the tabling on the 21st of May.
When we look at the past two budgets, the ones that didn't go through, the main foundation was around value-added tax and raising that revenue to fund some of the budget programs. Given that that's done away with now, are we likely to see a scenario where there's a lot of cutting that happens? Because especially when we look at the 11 billion rand that was set aside for teachers, we look at some of the social programs that South Africa has. Can we expect that with this third budget, it will be far more trimmed than the past two?
Well, of course, if we no longer have value-added tax in the fiscal framework, that does generate a gap that needs to be filled. And one of the areas that we are looking at, which the Minister has confirmed, is we are looking into various expenditure adjustments in order to fill that gap. One of the areas, of course, which we can look at are the expenditure additions that were announced in the previous budget. So the way to think about this is that all departments have their departmental baselines, as do provinces and so on. And the previous budget announced certain additions to those baselines. So the starting point will be, as we are looking to fill the gap that was left by value-added tax, which of the additions that were proposed in the previous budget can be foregone in order to ensure that the budget that we table on the 21st is still in line with the overall fiscal goals that we have set for ourselves. So that is the approach that we'll be taking between now and the 21st of May.
Treasury has had two goes at the budget so far, trying to work out where to possibly raise money. And on both those occasions, we were told as the country that there was no option to raise the money. It would have been value-added tax. So are there any other positive alternatives that you could look for in order to raise more funds for this budget?
Yeah, look, on the 21st of May, when we table the new budget, we will also signal what other revenue sources that they are available that we can return to in the next budget and over the medium term. But the challenge is that in the short term, to fill the hole left by the value-added tax no longer being there, it is very difficult for our other tax bases to do that. It is very difficult for us to increase personal income tax or corporate income tax, for example, which are the other two big tax bases, in order to compensate for the value-added tax gap. But there are certainly some very interesting revenue proposals that have come through as part of the consultation period the last few weeks, and those we are looking at the moment, and to the extent that any of those are viable in the short or medium term, the Minister will make an announcement on that on the 21st.
And I'm sure a lot of South Africans will be wondering what happens in the meantime, but there is provision for spending to continue, even though the budget hasn't been tabled. Tell us how you, most departments and also regions in South Africa are able to spend, given that we don't have a budget that's been tabled.
Yes, absolutely. So there are two pieces of legislation that are important here. The one is the Public Finance Management Act, or the PFMA. Section 29 of that act allows departments to continue spending for the first 4 months to a maximum of 45% of last year's allocation, and then 10% of last year's allocation per month thereafter. So that is what enables departments to continue to spend. And then last year's Division of Revenue Act, which of course is law, not the bill that we are currently working on, but last year's Division of Revenue Act of 2024 also has a provision that allows us to allow provinces to spend up to 45% of their allocation.
Yeah.
So between those pieces of legislation, government is able to continue to meet its objectives while we wait for the new appropriation bill and the new Division of Revenue bill to be finalized.
All right, that was Duncan Pieterse, Director General of the National Treasury of South Africa. Thank you so much for your time. Let's bring on now Khaya Sithole, the independent analyst, to look at some of the permutations leading up to the 21st of May. Khaya, Treasury has had two goes at this budget. It's brought about a lot of uncertainty, especially to the local economy, because it's something we're not used to. It's unprecedented, right? We used to a budget that's passed in February and life continues. But this time around, democracy proving to challenge some of the processes that lead us to some of these numbers.
Yeah, it's unprecedented, but clearly overdue, because I think we now know that there has to be a much greater interrogation across the ecosystem of what really goes into decision-making that is binding on the public. So I do think it's an important development. But obviously, the question of what they will be able to find over the next 21 days and how they'll be able to balance the books is, for me, the most difficult one. I think especially now that we've taken off what they insisted was perhaps the most practical source of additional revenue, and if the other sources of revenue do not materialize, and we do obviously have this rumor that these other political parties that have been working with the ANC allege that they had alternative revenue proposals. Obviously no one believes it and no one has seen it, but be that as it may, if they do come up with something cogent and tangible, it might be incorporated into it. But I do think the focus now has to move on to the question of borrowing or indeed cutting spending.
There's been a lot of concern about the stability of the government of national unity and whether the DA and ANC would split. But it seems to me, after this messy process, as Inoko Kodongwana puts it, they are still willing to work together going forward.
I don't think there's ever been any legitimacy to the idea that the DA might walk out of the GNU. The DA must be held to its word. It was the DA that said that the reason they're joining the GNU is that the alternative would be a doomsday coalition that would condemn South Africa to eternal damnation. And of course, if the DA said that, it is a message they gave to their supporters last year, and it's a message they gave to South Africa. The idea that they could then walk out of the GNU on the basis that they didn't get the numbers that they wanted in the budget was always fanciful for me. I never thought it was going to materialize, and if it does, it will be suicidal for the DA itself, because, well, if we assume that they were correct and there is indeed a doomsday coalition, well, how do they benefit from the country being condemned into eternal damnation? Makes absolutely no sense. I've never believed in that theory.
Looking at the budget process going forward, Enoch Godongwana is saying things have changed and definitely they will also try to learn some lessons and apply them going forward. But whoever's going to take over as finance minister in the next few years is going to have their work cut out for them, because it's not just a stamp and move process.
Well, I suppose at the end of the day, we have to remember that we wouldn't be here if the ANC had done what needed to be done. The ANC needed to find a way of growing the economy, because the economy that is growing is the baseline for all the taxes that you want. So if you had a robustly growing economy, we wouldn't be here, because whether you're looking at transactional taxes in terms of VAT, or whether you're looking at earnings-based taxes, or even, corporate taxes, if you had a growing economy, you wouldn't have this problem. So whoever takes over as finance minister in the near future, in the long term, they're going to have to bite the real bullet. The real bullet is what is the country's economic blueprint that gets us away from this particular problem. And at this stage, this is a patchwork process. As painful as this is the patchwork stuff. It actually doesn't get us anywhere. Next year, you will have more demands on the resources that are limited. And if there are more demands, it will be a question of, well, what else can you do in order to solve the next budget deadlock? And I think the answer is staring at us in the face. I just don't know if we have the government that knows how to tackle it. The DA tried to smuggle in that question of, well, what is the solution to the biggest elephant in the room? And the ANC obviously decided that is an elephant too big for them to tackle.
That is Khaya Sithole, independent analyst, talking to us about that set date for the 21st of May, the third attempt by Treasury to table a budget.
The Money Show.
The markets.
Biggest story on the markets internationally, the U.S. economy falling by 0.3%. The gross domestic product fell by 0.3% year on year, largely pushed by a surge in imports ahead of President Donald Trump's tariff hikes. Chris Stewart, portfolio manager at 91, joins us now. Weaker markets on the New York Stock Exchange after those news. But this is the world's largest economy. Are they staring down the barrel of a recession, Stewart? Chris?
Yeah, good evening, Motheo. I mean, as you point out, it's probably the most important single news story of the day. Not totally unexpected. There's been a lot of bring forward of consumption from the U.S. consumer to effectively purchase in the month of March before punitive tariffs kick in. And as a result of that, I guess we've seen, the impact of a surge in imports on GDP, with GDP growth going negative in the US on a quarter-on-quarter basis for the first time since 2022, and a little bit more negative than the market had perhaps anticipated. In addition to that, we saw some mixed inflation data, some of the prints looking okay, some of the prints looking a little bit less okay, and we saw a fairly disappointing ADP employment data. That's the precursor to the non-farm payrolls data that'll be out on Friday. So, all of the backward-looking information right now loses a lot of its relevance due to the distortions in behavior created by, the potential for tariffs going forward. So, the fact that inflation data looks okay will perhaps be overlooked by the Fed, because they'll say, well, that's history. Tariffs are going to be inflationary. We're concerned around the impact forward-looking of tariffs, so we're not going to reduce rates. And equally well, if you're Donald Trump, you'll just say, well, ignore the negative in GDP print, because that's purely as a result of people bringing forward their behavior in terms of imports, and that'll all normalize in the next quarter, and we're going to get great trade deals, et cetera, et cetera, et cetera. So at the margin, being negatively received by the market, and I think probably rightly so, not because of the data itself, but because of the forward-looking implications thereof.
Glencore, not so positive about thermal coal going forward, having a very weak production report when it comes to coal.
Yeah, it was thermal coal. I think as importantly, perhaps even more importantly, it was copper, and missing on copper production, and in addition to that, indicating that their all-important commodities trading business, or the so-called marketing business that they term, expected to land their earnings before interest and tax, their so-called EBIT, sort of in the middle of the guidance range. And I think the market was hoping in this environment that they would have done a little bit better than that. So, disappointing production. You've got a cobalt export ban in the DRC, which is going to, spike the cobalt price, but has negative implications for Glencore's ability to sell cobalt and, near-term revenue generation. And the market voting with its feet today, the stock down at one stage around 10%, closing down 8.5%.
That was Chris Stewart, portfolio manager at 91, covering the markets for us. The JSE All Share up 272 points, really pushed up by industrials, which are up more than 0.5%, with mining shares also rebounding. Glencore down 8.5%. Anglo was down 5%, with Thungela down 2.5%. And that is your market report. Stand by for your Eyewitness News headlines.
Show will give you all the tools you need to navigate the complicated world of economics and commerce, even if you're not a numbers person. The Money Show
with Motheo Khoaripe
6 to 8 p.m. Making money make sense
on 702 and Cape Talk.
Welcome back to The Money Show. In the first 30 minutes, we were talking about the uncertainties that are happening locally in our economy and also internationally as the US saw its GDP go down 0.3% in the first 3 months of 2025. With all this uncertainty, the chaos on the markets, that's one haven that investors have been putting their money in, and that's gold. Gold's performance in 2025 has been undeniably impressive, with prices soaring more than 25% and hitting multiple record highs along the way. Now we're going to be talking about exchange-traded funds, this time housing gold, and how that has improved over the market. Investor demand for gold is expected to accelerate even further this year after a surge in the first quarter. The World Gold Council saying that the latest gold demand trends report for the first quarter of 2025. We're now joined by Joe Cavatoni, market strategist for North America at the World Gold Council. Joe, looking at gold, it can't go wrong this year with all this uncertainty happening on the market.
Yes, and great to have you have the opportunity to connect with you today. Yes, the gold market's definitely putting up returns, price performance, and showing the demand profile that is definitely keeping it front page news and right in the forefront of all investors' mindsets at this stage.
What trends have you picked up in terms of even exchange-traded funds that are working through gold?
So I think there are a couple of key factors. The first is a continual trend of central banks adding to their reserves, but specifically to the exchange-traded fund market. I think the amount of risk and uncertainty about the economic outlook on a global scale has really amplified the adoption of gold through the use of ETFs, as well in the physical market. But ETFs are a very clear indication that Western and Eastern investors are realizing they need that type of help in their portfolio to minimize risk and shocks that could come to their portfolio and volatility in prices. That liquid instrument of gold through ETFs is where they're going to get that allocation.
And of course, exchange-traded funds help investors invest in bits and pieces of different aspects of the markets, so making it quite accessible to most people who are trading on the market. This demand for gold on the market, is it also, trading on maybe factoring in the supply for gold? Because as more people try to use gold as a haven, is there enough to go around?
Well, I think that's a great question. Now, what we've seen in terms of our demand trend for the year so far, we've actually seen a relatively flat number relative to first quarter of 2024, about a 1% increase in tonnage moving through the system, but the dollars at work are definitely much higher, and we're actually seeing a significant increase in the AUM and the numbers that are moving through the system, record numbers there. But to the supply side, I think we've been seeing and continue to see a steady flow of about 1 to 2% of increase in supply that's being met in the market. And I think what we've actually seen that's quite interesting is a little bit of a slowdown in recycling as a source of supply. When you start to see higher prices, jewelry or other forms of gold that could be recycled come into the market. And actually the interesting indication for us by seeing recycling not yet being as large as we would have expected might indicate that those that are in the fabrication side or the other sides of sourcing that recyclable gold haven't seen the top just yet. So we think that that's a slight indication on the supply side that there's more room for upside on the price.
There's a lot of concern on the global markets, especially around the higher tariffs that have been imposed now by the US and how that will play out for the global economy. Gold has already hit more than $3,000 in terms of a record. Do you think it's hit a saturation point with that price going up, or do you see it even going higher?
Well, we actually think the $21 billion, as an example, that's flowed into gold, most of that going into U.S. ETFs, and actually the capacity for more investment dollars to continue to go into gold, increasing the overall allocations on a global scale. And we've actually seen that most recently with a real surge in the interest in investment vehicles for gold in China. We see that there's lots more demand that could be coming into the market, and that will be what will continue to make the price quite buoyant. So while we continue to hit these highs, these record highs, these numbers that are actually just exciting and never seen before, we see a very strong case with economic uncertainty, very unclear on a global scale, and interest for investors as well as central banks continuing to add gold to their reserves. That keeps giving us that upward trajectory. And many of the analysts in the market are now talking about a 4,000 number for the gold price in dollar terms.
Wow.
So we subscribe to that view.
When you look at the difference between the retail investors and the central banks investing into gold, are the retail investors, buying more through these ETFs in terms of their interest in gold in their portfolios?
Yes, I think that the retail investor or an institutional investor would be much more likely to use the financial product, like an exchange-traded fund, whereas the central banks definitely transact in large bar templates and formats where they can actually hold it either at the Bank of England or at an approved vault or even at their home front. So ultimately, they're more of a physical consumer. And actually, the other thing about exchange-traded funds is it's fast and easy for someone to be in and out of the market with limited friction to the trade. They can just buy it as simply as buying an equity. And there are plentiful numbers of ETFs that are available for people, whether it's in China, India, South Africa, Europe, or the U.S. So they're readily available for people.
Now, we won't always have this uncertainty and chaos on the market. Are we going to reach a point where we see a gold bubble where too many of us have invested in it and it just crashes?
So there's not a lot of sign that we can find a scenario where the floor falls out of the gold market at this stage. We've been definitely thinking about what are the factors that could play out. But even if you do start to see some level of certainty, whether it's negotiations between the U.S. and a number of nations around tariffs and how that could play out, or central banks feeling a little bit less concerned about debt levels of U.S. debt and the dollar risk, or whatever the factors may be, what I think we've reached in terms of an investment paradigm is that correlations between bonds and equities are as high as they've ever been. Volatility is very fast-moving and very heightened in all the risk asset landscape. So it's looking highly likely that investors were going to be bringing their money to the market and allocating gold and keeping those allocations in place. Even over the last few years, when we've seen ETFs, as an example, flat or slightly down in terms of units outstanding, AUMs were growing and they weren't selling off like they may have done in the past. We see risk and uncertainty, even in times where things have calmed down, still pretty high on the horizon. So we think that the gold allocations and the prices will likely stick where they are.
You know what they say, if you hear people talking about an investment strategy, it's too late to jump in. Is this the case with gold? We've seen multiple record highs for gold, but for somebody listening to the show and thinking, is it too late for me? Can this still come in and get some value?
I definitely think investors or anyone listening to the show should remember two things. Number one, global factors will drive the gold market, not just one single factor, and we're seeing that play out. And number two, you need to think about your gold allocation, not just for a quick hit moment. It is a strategic allocation. So think about owning it for 10, 20 years. It's permanent in your portfolio. And with that in mind, you can live through the ups and the downs, no matter what they are. And allocating that way will actually bring you the long-term value of expected returns, which rival that of equities of about 8%. So think strategically and make your moment to come in and feel confident about getting involved.
That was Joe Cavatoni, market strategist for North America at the World Gold Council, joining us for that conversation.
The Money Show with Stephen Pieterse is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Well, while MTN was getting some nice numbers from MTN Nigeria today, reporting significant turnarounds in its bottom line in the March quarter. Also, the group saying it added 3.2 million new subscribers to the network, bringing its total base to 84 million subscribers in Nigeria. There were also some news coming out in South Africa. The long-running litigation between MTN Group and rival Turkcell is now headed to South Africa's highest court, the Constitutional Court. This is after the Supreme Court of Appeal on Tuesday upheld aspects of the legal appeal brought by Turkcell, and after MTN vowed to fight this judgment in the Constitutional Court. Joining me for this conversation is Jan Vermeulen, editor at My Broadband. Jan, welcome to The Money Show.
Pleasure to be here.
This case now hitting the Constitutional Court. At one point, we didn't have jurisdiction, but SA Court's also saying we do have jurisdiction. Can you take us back to why we're here? Why is MTN having this face-off with Turkcell?
Sure thing. So this matter started more than 10 years ago and has to do with MTN winning a tender to launch to get a license to operate a mobile network in Iran. And Turkcell claims that it was the winning bidder for the Iranian license in 2004, and with MTN coming second, but then MTN was subsequently handed the license. And Turkcell's allegations are not slight things. It alleges that MTN bribed officials, arranged meetings for Iran with South African leaders, and promised Iran weapons and United Nations votes in exchange for a stake in Irancell. Those are some pretty heavy allegations. And so first, Turkcell and its subsidiary East Asian Consortium took MTN to court in Washington, D.C. Those courts ultimately decided they did not have jurisdiction. So Turkcell came to South Africa, and initially the High Court. Now, so the license was handed out in 2004. The case in South Africa was only heard in 2013, or rather sorted out in 2013, and the High Court then ruled that the South African courts do not have jurisdiction. And Turkcell took the matter on appeal, and only in 2022, the High Court only dismissed the case in 2022. So you're looking at a gap from 2013, when the case was filed, to 2022 for a ruling. And now in 2025, we're hearing that the Supreme Court has overturned that High Court ruling on appeal, and MTN now wants to take the matter to the Constitutional Court. So it first has to argue to the Constitutional Court why it's a constitutional matter. So that's not a done deal by any stretch. But yeah, it's a long road how we ultimately got here, with long stretches in litigation. And the merits of the case have not even been heard yet. This is just a fight over jurisdiction. And so you can see how this kind of lawfare works to delay matters in court.
Now, MTN went into Iran, a virgin place to go into, because it didn't have a lot of telecommunications services. They're now at 43% in terms of their market share in Iran. So definitely willing to put in, a war chest to try and fight this case, spending around 78 billion rand so far.
Yeah, it's an interesting one, and then we're looking at another 78 billion in damages that Turkcell is claiming, and the part of the question of Iran comes up at MTN's results every quarter, half year, or full year, whenever you decide to tune in, because they can't get any money out due to the sanctions, and so. MTN is operating this network in Iran, but there's no way for the profits from that operation to be returned to shareholders at all until the sanctions lift. And so it's a constant question of why are you there? Why have you invested so heavily in Iran when there's really appears to be no shareholder benefit? And so, hopefully one day this bet pays off for MTN, but it's raised so many questions and so many moral and ethical questions along with financial questions that one can't help but wonder whether this will be worth it for MTN in the long run.
I mean, when you look at MTN's operations, they in 2020, I think, decided to divest from most of the Middle Eastern markets, Syria, Afghanistan, and Yemen, but still remain in Iran. In this case, going to the Constitutional Court might give us a few more, looking into that 2005 deal, whether the bribes did happen and how MTN got to get that license, even as Turkcell claims that they had won over that license.
Yes, and especially the allegations that MTN promised to arrange meetings for Iran with South African leaders, because those kinds of allegations are surfacing now again from the United States, and not implicating MTN, but talking about South Africa cozying up to Iran, and whether those two things are linked, or if it's a complete fabrication on Turkcell's part. And then, yes, MTN, when questioned about this, the group CEO, Ralph Mupita, regularly says that Iran is actually, a very good business, but the problem is just that they can't get the cash out. And I think that's kind of what's got them stuck there as well, because if they were to exit Iran, firstly, they would leave all those people in the lurch who rely on their connectivity. And secondly, they would just have to pack up and leave everything behind, without being able to sell the asset and see some kind of return on investment. So it's a bit of a mess that MTN has created for itself over there in the Middle East.
Just how big of a dent would it be then if, for instance, the Constitutional Court decides in Turkcell's favor, because these parties have been in this ongoing fight, like you say, for more than 10 years. MTN has invested money into this case, but also invested a lot of its money and capital into the Iran business. If the Constitutional Court decides in Turkcell's favor, this would be a big drawdown for them.
Well, it would mean that the case would actually have to go to court. Because right now, what MTN is doing is essentially kicking the can down the road, because it certainly seems like Turkcell is not one to give up this fight. And so, but one could also argue that MTN is trying to figure out where this case should be heard, under whose laws this case should be heard. And so to put the nuance just here, the Supreme Court didn't just outright rule in favor of Turkcell.
Yeah.
It said that some portions of this case need to be heard in Iran's courts, not South African courts, but certainly the South African courts have some jurisdiction over some matters. And so, yes, if the Constitutional Court upholds the Supreme Court's ruling, or if the Constitutional Court says this isn't a constitutional matter, we're not going to hear this case, then it's not an automatic loss for MTN. It just means that then the case has to go to merits. And so then we're back at the High Court in South Africa, and the merits will have to be argued, and we'll see who has the evidence to back up their claims.
All right, that was Jan Vermeulen, editor at My Broadband, talking about that Turkcell versus MTN case going to the Constitutional Court. Time now is 7 o'clock. Bali Tatani with your news.
The Money Show
with Motheo Khoaripe
on 702. Let's walk the talk.
The Money Show with Stephen Grotes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Now let's talk about something I know nothing about. I've been trying to catch up with AI, artificial intelligence, but also always some other aspect that's coming out every other week. In our Business Unusual feature tonight, we talk about rethinking intelligence. And tonight we talk about the AGI conundrum. And one person who knows more than me is Richard Mulholland, our founder and AI agency, Too Many Robots, and author of Relentless Relevance.
The Money Show.
Business Unusual.
Welcoming Richard Mulholland now to talk to us about AGI as a conundrum, the potential implications of artificial general intelligence, and whether humanity's understanding of intelligence is overly narrow. Now, Richard, I'd like to tell you off the bat that my intelligence of AGI is narrow, but that's why you're here to help us just unpack this. What is AGI, and where does it place in the tech world?
Okay, Motheo, so maybe where we could start is going one step back. So when we think about AI, what we generally think about is actually ANI, artificial narrow intelligence. So when you use ChatGPT or when you use any of the AI tools that you're using, it is actually an artificial narrow intelligence. It's really, really, really good at doing one thing, but nothing else. So for example, the AlphaGo AI that beat the world's best Go player in one of the most complicated games in the world would be unable to check your grammar of your email. And the thing that checks the grammar of your email would be unable to drive your self-driving car. And when we get to AGI, which is artificial general intelligence, and this really is what all the big AI teams around the world are obsessing over right now, is to create general intelligent agents that are able to do the thinking, human-like thinking for us. And I think it's quite a narrow point of view, but the current reality or the current assumption is that we'll reach AGI, artificial general intelligence, that is human-like levels of thinking within the next year to 5 years.
When we talk about artificial intelligence and technology that is similar, is using humans as a standard necessary? Because obviously we're trying to create a technology that far exceeds our thinking.
Right. I think that's a wonderful thought experiment. You see, when AI was started in the 1950s, the entire thing was to create a computer that could fool other people into thinking it was a human. And the idea was we used humans as the benchmark under which AIs would be built. So even the word A in AI is problematic for me because it's saying artificial intelligence. And, another word for artificial is fake intelligence. But of course, these aren't fake intelligences. They're just different intelligences. They are fake human intelligence or artificial human intelligence. But this is a very, very weird yardstick to continue to use. You see, what we have is a whole bunch of narrow intelligences that are very, very much smarter than us in those narrow fields. What if we stop thinking like a human intelligence, a general intelligence as the end game, and what do we think more for like a beehive, a hive mind intelligence, where we have a whole bunch of highly specialized narrow intelligences? The goal should not be to make all of them able to do everything. The computational power required for that would be staggering. The goal should just make sure that they're able to communicate with each other. Now, Motheo, this is an interesting concept because this is actually how the human brain works. The human brain has these things called cortical columns. These are these very, very narrow little things. They call them little memory sticks in your brain, and each one of those memory sticks does just one thing. What is kind of cool is that, like, if you see a person, cycle past you on a red bicycle, the thing that knows it's a bicycle in your brain is different from the thing that understands the concept of red. Now, your brain is able to connect itself and do this magic trick called binding, which means that when the bicycle goes by, the red doesn't stay behind. Your brain is able to keep those two connected. Now, this is what we need our AIs to do. We need them to start thinking in a connected way. And it's why I think the model, the victory condition of human-like intelligence is thinking far too small.
If we look at the technology as you're explaining it to us, are you currently saying it's working in silos? It's great technologies that can, for instance, self-drive. It's great technology that can help you put together a presentation or, a presentation deck for a big company. But you can't really marry the two at the moment, and that's what AGI will try to do, try to get the cognitive abilities of the human brain.
Yeah, well, see, what AGI is trying to do is it's trying to build. So if you imagine there's all these little silos is nice, but imagine all these little islands, okay? And each of these little islands of information is able to do one narrow thing. What AGI is trying to do is to kind of smoosh all of them together into this one big continent of knowledge, this one big thing that is able to do everything. My hypothesis is that instead of trying to build a bigger island, what we need to do is build a better boat. So all we have to do is to figure out how to get A to speak to B to speak to C. And then we're capable of doing some really, really interesting things. Now, recently, about a few months ago, I don't know if you're aware or if you heard anything about an AI that was launched in China that was called DeepSeek. It was very disruptive in this space. Right. Now, so what it did, and it's kind of funny because I foreshadowed this to a degree. What they did is they realized that you could look at this in a very different way. So in the way your ChatGPT looks at this is it trains everything in everything. So if you imagine, let's use the metaphor of a doctor here. Imagine one GP that is trained with all the skills of the world's best oncologist or the world's best pediatrician of the world's best. And to train every single GPT, every single instance of that has to learn all of that information. And when you ask it a question, you're asking somebody a question, the doctor a question, and it has to go through all of those memory banks. Now, what DeepSeek did, it kind of said, well, no, hold on a second. We don't need one really, really, really smart GP. What we need is a series of specialists. And what we need to have is somebody who's going to triage the request at the beginning or at least act as a gatekeeper. And then what DeepSeek says is, oh, you're asking a question about oncology. Fantastic. We'll send you to the oncologist. So now the amount of computing power to train that particular, and I'll say GPT here, but that particular AI is a lot less than trying to teach everything. Now you're teaching all of them only what they need to know. And then you're having a central point at which everything we can direct the traffic. And that to me is very, very exciting. Now, if we take that beyond a GPT, a generative pre-trained transformer, and think about that one step further or one step out in terms of AI generally, then we get a very exciting picture of technologies that can communicate with each other.
Yeah.
And I think that is the exciting future we're heading for.
When we look at the world we live in, what practical examples can be given where artificial general intelligence helps make the world more convenient, more greener, maybe more faster? Where can it be placed in our working world where we could see the changes?
Okay, so AGI itself doesn't exist in its current form. We have what we could refer to as agents or agentic AI. While I think agentic AI is exciting, I think it will be a footnote in the future in the AI journey, in that by the time the technology is fully mature and robust, we'll have bypassed the need to have these things. Because this is, if you think of an agent as a intern in your business, you're not going to give it all of this super, super technical things and deep thinking, but a whole bunch of the dog work, research this and then go and look into that. So for example, if you wanted to book a holiday, you might have to do a number of different things. You might need somebody to book a car rental and somebody to, or one technology to book a car, one to book a hotel, one to plan your itinerary, one to make sure you get Forex, one to make sure that all your air miles and loyalty programs have been brought into the mix. Now, if you imagine an agent, which is let's call it an AGI light. So it's not quite a general intelligence, but it's heading in that direction. What it does is it looks at the task from a master point of view and then says, okay, what do I need to do to break this up? So it might have one offshoot go and query a database inside, checking that you have the leave. It might have something else go and go online to book you a hotel with certain specific things that you think about. It might have something else book your itinerary, your train tickets. And so it can do all of those simple functions for you. It can prepare itineraries for you. And it's very, very good at doing very, very basic database tasks with a little bit of thinking on top of it. But now this is where we're at, and yes, your AI has been around for a long time, but let's say this is where we're at since 2021, when AGIs started coming to play, when GPT-3 was really popularized. If we're that far already, imagine where we'll be 5 years from now.
So we could have the super AI, maybe super computer AIs.
Well, that's the next thing. That's ASI. So artificial super intelligence. And that's Exciting and scary, but we only have optimism. The optimism is the only thing worthwhile to think about. We have all of history that shows that anytime we create a new disruptive technology, it just creates more interesting problems for the humans to solve. ASI is going to change. It will essentially change one thing in which we might not be the theoretically smartest around anymore, but I think it will still be a force for good. And while we can be a little bit afraid, we should certainly not be pessimistic.
Look, Richard, I'm still
quite
worried about a smartwatch telling me to take a walk, but I guess I'll have to catch up with the rest of the world. Richard Mulholland there, the founder of AI agency Too Many Robots and the author of Relentless Relevance, talking to us about AGI, Artificial General Intelligence.
The Money Show.
Consumer Ninja.
It's a little after 7 here on The Money Show, and every time on Wednesday around this time, we call on the Consumer Ninja Wendy Knowler to handle our consumer issues. And this time around, we're talking about being offloaded by your insurer. Now, did you know that your insurer can cut ties with you, especially if it's a small insurer that you've been constantly claiming from? Yes, we get insurance, of course, in order to claim in case of emergency. But if you do that often, your insurer can offload you, and that's what Wendy Knowler will be talking about tonight. Wendy, we pay these premiums, we get all sorts of insurance to make sure that we back ourselves in case of an emergency, but why would an insurer offload me?
Yeah, I think a lot of people don't realize this is even a possibility, right? Because as you say, the rationale is this is why I have insurance. I pay my premium as I'm supposed to every month so that when bad stuff happens, I'm not at risk financially apart from, the agreed excess. But the advice from the industry is don't claim from your insurer on your policy for every little thing. And that would offend a lot of people thinking, that's why I have insurance. So if it's a valid claim for a fender bender or a stolen handbag, I'm going to claim for it, as is my rights. But the problem with that is that should you then go on to have a major claim or several more small to medium ones in quick succession, what is likely to happen is that your insurer will add up all your claims for the past 3 years, and if the total is more than or very close to what you've paid them in premiums, they will either dramatically increase your premium, like double it or more, or in many cases, they just skip straight to cancelling your cover. We don't want you anymore. So, which is quite harsh. And they can do it. A lot of people that have this happen to them write to me and say, surely they can't do that. And the harsh reality is that, yes, they can. They must give you a month's notice. But there is nothing compelling them to accept the risk that you are now posing to them. And we're also seeing it, I've chatted on this show not so long ago, in homeowners insurance policies. That's on your property itself, not the contents. In South Africa's flood zones and houses with thatched roofed homes in areas that are prone to fire. And the insurers are relying on latest, greatest technology-driven risk prediction to do it. But that's another story. The case study today, and why I want to talk about this, was Sithole of Durban. She contacted me last week about a problem she's had for the past 2 years since being offloaded by her insurer. So in March, it happened in March 2023. She said, I had insurance with them for home contents. I made 4 claims. It was actually 5 when I looked at the claims history, and they then cancelled. So I have, for the past 2 years, asked for a letter explaining why they've listed me as uninsurable, and they only yesterday sent a letter stating my claims ratio was the issue. But she says, I claimed for what I was covered for when the unforeseeable happened. I made no fraudulent claims, which is why all the claims were paid out. How then are they allowed to list me as uninsurable, as if I've committed a crime? This is really frustrating, and I can't seem to get insurance anywhere. Is there any way at all to get this removed? So I think the first thing to say there is that in South Africa, there isn't a publicly available sort of centralized list that explicitly names and shames people who have been offloaded due to an unfavorable claims history. Maybe I shouldn't say shame, because there's no shame in that. It's fraudulent claims are shame. But if you've just claimed too much, it's just naming you. There isn't an uninsurable list. But what the industry does is they have mechanisms to track claims and risk profiles. That information is shared within the industry. And so they will know, which is also another reason why you should never lie about your claims history, because you will get found out. So yeah, that's unfortunately where our Sanele Sewe has found herself.
So this is
an extremely high risk. Yeah.
This is because she had claimed more than she had paid in premiums. I'm
Pretty
trying to
much,
understand the ratio. Yeah.
Okay, so it's actually quite an interesting thing to do this for yourself through your broker, or if you directly insured, is ask them. I would do that. Phone and ask them where if you've had a few claims. So in her case, within the space of a year, from December to the following November, there were 5 claims. Stolen TV in December, 11,000 rand settled. April, stolen portable possessions, they weren't specified, another 5,700. Month after that one, cell phone settled, 12,500. September, unspecified portable possessions, another 2,700. And then in the November, another TV settled, 10,250. So in 11 months, 5 claims totaling 42,000 rand. And finally, last week, she got a letter from her insurer telling her, after recently investigating your home contents cover on your policy, we've been left with no choice. Well, that's not exactly true, but anyway, to inform you that the risk associated with your policy no longer allows us to grant you cover. We are therefore cancelling your cover with effect from the 9th of March 2023 due to an unfavorable claims ratio. In other words, what they're saying is we have paid out too much to you for claims compared to what we've earned from your premiums, and we don't like this claim pattern. We don't like it, and we are not obliged to keep insuring you. We don't like your risk. Thank you. Goodbye. It's very harsh, because you've got to declare that, right? If you go and apply, or when you go and apply for alternative cover, and that's
this
exactly,
could raise your premiums.
Yeah. So if you do find cover, and suddenly say that she went to another insurer, a big one, and they said you're uninsurable, and so she was just like. She was alarmed and put off from applying elsewhere. I've told her that she should apply, but yes, if she does get cover, because this has been 2 years she's had no insurance, and that's also not great to have a break, right? The insurers don't like that either. That's what they always ask you: have you had uninterrupted insurance cover for the past 3 years? So if they do decide to take her on, maybe she's changed address, maybe there's something in her assumed risk that is lower in the last 2 years, then you're right. She will pay a higher premium, or she'll have a higher premium and a very large excess. They will do things to mitigate the risk. So being offloaded by an insurer is a very, very big deal.
And then how does one not really find recourse, but how do you avoid getting into a situation where an insurer offloads you?
Okay, so you really, when it comes to the scenario, you I always say you should jump before you're pushed, right? So this is a lot unpalatable when it comes to, as an advice goes. So before you make a claim, say your sunglasses are stolen, or you've got a little ding in your car or whatever, minor thing. Consider your claims pattern in the last 3 years, and particularly in the last year. But if you've had a run of bad luck, particularly of the expensive kind, think twice about submitting that claim. If it's one of those every little thing kind, so it's a not a massive claim. Your roof didn't blow off in the storm, or your car wasn't hijacked or something like that. As one insurer told me, clients can insure a healthier claims history and low risk profile if they take into consideration the frequency of claims being submitted as well as the amounts being claimed for. So you need to be on the right side of that ratio to avoid being to be offloaded. And I mean, I've had this debate with people. They say, but with insurers, it's you win some, you lose some. I mean, for every one person that's had a bad run, there'll be others who haven't claimed for 10 years and have been paying massive premiums. And it's up to your insurer's appetite for your risk. And I'm just saying, don't claim for every little thing. As offensive as that may sound, if you're paying a premium every month, it's the way to avoid being offloaded. It's a way to avoid an unfavorable claims.
Is there any
ratio.
regulation that compels insurers to disclose offloading as a possibility before it happens?
Yeah, so I investigated that not so long ago. The policyholder protection rules, which all the insurers are obliged to abide by, they don't compel them to advise their clients that they could have their policies cancelled if they overclaim. And I think they really should, just voluntarily. I mean, if you look at the policy documents, they will say we will offload you if you don't pay your premium, and if there's fraud or anything like that. But I haven't seen one, and I'd love someone to put me right on this, where they've said, if you claim too much and too often, we can offload you. Not that people read their policy documents anyway, but I think in the interest of full disclosure, I think they should have that, and that clause should be there, whether it's required legally or not.
That was our Consumer Ninja Wendy Knowler reminding us to keep an eye on that claims ratio, the premiums you pay versus the amount of times you claim could count against you. An insurer could offload you saying they've paid out too much and you're just too much of a risk. And that, of course, could raise your premiums with your next insurer. So there's your advice for this week. Thank you very much, Wendy Knowler, tonight.
The Money Show.
Shapeshifters.
Welcome back to The Money Show. And of course, every Wednesday around this time, we talk to a shapeshifter. This is when The Money Show talks to a business person or change agent who has shown an ability to adapt to their conditions. Tonight, we speak to Shireen Motara, founder of The Next Chapter and CEO of Tara Transform, and a certified coach and consultant. She chats to us tonight about her life and times, and also her business that she's been through and some of the passionate projects that she's running. I'd like to welcome to The Money Show, Shireen Motara.
Thank you so much, Motheo. I'm very happy to be here.
Good evening to you. Before we get into the major projects that you've gotten into in the company that you run, can you tell us about your upbringing and some of the things that have led to you being this resilient and strong woman that you are?
So I grew up as an only child of a couple who were kind of mixed race. My parents divorced when I was 10, but I remember growing up with a father who was very politically active those days in the UDF, and we lived in Benoni, so he was also involved with the Benoni students' movements. And a mother who was a social worker. So a lot of my childhood years was spent in community with community activists and so on. And my father was also a risk taker. In some ways, I have followed in those steps. I like taking risks. I'm not scared to take risks, but often his risks were not so successful, I guess, until he found what he needed. The latter part of my childhood was my mother and myself really on our own. It was difficult at times, but we made it through. I think my mother was very resilient. She was also very community orientated, and I think I guess, inherited some of those qualities from her.
Those qualities and your upbringing in Benoni must have led to, your career choice as a young woman. Where did you see yourself in the world, and what sort of goals did you have for yourself?
So I grew up. I went to what was then called an Indian school, and I did not look Indian. But career-wise, there were always kind of two choices. One is that you become a dentist, or the other is that you become a doctor. And so I had decided, okay, I'm going to be a dentist. Started my first year at university with a BSc and totally hated it. And the next year I changed to law. And so I completed I have 3 law degrees because in those days we had to do a BProc and an LLB, and then I have a master's in law, but I've never practiced law. However, when I was at university, I was exposed to a group of women who taught me about feminism, about women's rights, and so on, and I really became passionate about that. And my early work career started in the gender-based violence spaces, particularly in legal work around gender-based violence. Those years it was still development of new legislation, training organizations on the Constitution, supporting non-profit organizations around understanding the law and so on. And since then, my career has primarily been about a commitment to women's rights, to women's empowerment.
Being someone who's also from Benoni, I understand just how tough it is to move from a small town like Benoni and also get a worldview as soon as you get to varsity and the rest of the world. How was the culture shock, and how did you handle it as you went into varsity, experienced some people from different backgrounds?
I made a conscious decision to go to University of the Western Cape because I had a number of friends that were there, and I felt that I would feel welcome there. I didn't want to have another experience like I had at school. And so just having friends there was amazing. Of course, it was a culture shock because, from staying at home with your parents and then going to university and having total freedom, but having to be self-disciplined and so on was challenging at times. But I think what got me through was having solid friendships, supportive friendships, and then also having different support systems within the university system. And I hope they still have those.
At what point do you think that you found your own voice? Because I hear you studied law, you did the 3 degrees, but then also got into very important work of legislation around women empowerment and also the constitutional practice in South Africa. When do you think you found your voice?
As I said, I was always willing to take a risk, and I think some of my bosses saw that in me, so they gave me opportunities. So since my first job was kind of not my dream job. So my second job, when I started working in women's rights, since that time, that was 1997, my bosses gave me space to have a voice and supported my voice. And I think that did a lot for my confidence. I myself struggled with confidence and lack of assertiveness. And so even when they would give me opportunities, I would step back. Until I started realizing I have a contribution to make and so on. And then, I started doing some media interviews around the work we were doing. And then I also stepped up onto to ask my boss to nominate me for my first ever board opportunity, which was at the then Technikon South Africa.
When you look at your career and, the way that you've taken, getting into the world of coaching, how does that come about? When do you decide, okay, I actually want to be a coach and strategist?
Yeah, that was totally coincidental. I mean, I don't think that in my wildest dreams I would have thought of coaching, when I was at school. The only coaching I think we knew then was sports coaching. So I was working in London at some point for the Treasury there in human resources. And my mother got very ill, so I had to come back to South Africa. And when I came back, I started working with a project called Link, which was around supporting leaders in the children's sector to collaborate more effectively. And those leaders included government, business, donors, and so on. And part of the program included offering coaching to these leaders in their individual capacities and as groups. And that was my first exposure to it, and I saw the impact of it. I've always been passionate about supporting and mentoring others, and the coaching for me was just, taking that to the next level. So I went to make a loan, and I decided to go to a coaching program at Stellenbosch. But I only really started coaching many years later, 5-6 years later, and now I find it as a foundational skill, even when I do consulting work and facilitation work, because the way in which one works as a coach is really helping others to see themselves differently and beyond the kind of boundaries and boxes they've placed around themselves.
You worked at a time when there wasn't a lot of woman leadership. In fact, in 2025, we're still not there yet. But did you find those coaches as you came up, strong women that were around you, that flanked you and helped you get to where you are now?
Yes, I mean, at the time that I was getting some coaching and seeing coaches, most of the coaches were actually white women and white men. There was, I mean, I know one coach who has been an amazing inspiration to me, Alicia Pieterse, and she was the one of very few Black women coaches, and she also came from a similar kind of professional background to me. So I think I was inspired by her journey, but also inspired by the fact that that there is opportunity as women to be able to walk this path and to be able to bring value to others' lives, which I guess is also something, we often say women are nurturing, which I don't often agree with, but I think in my case, it is a form of nurturing that I want to do, particularly for other women.
Why did you start Next Chapter, the organization that helps women embrace personal growth, redefining their priorities? Of course, this is coming from your coaching background, but what did you think that needed to the necessity to open a business like that to help other women?
So I have been, as I said, I've always worked in women's rights in spaces that support women. So that's always been part of my career. And I also currently as well, the Tara Transform, I started well before the Next Chapter. And Tara Transform is a consulting and coaching, what I call African feminist agency that supports women-led, particularly organizations, in relation to social impact work. And part of, that work has been very, very demanding, but also very fulfilling. However, I reached a point in my life, I turned 50 during COVID, and I reached a point in my life where I was feeling totally exhausted and not feeling like I'm living the kind of life that I want to live. So I made a decision to pack up our lives, myself and my daughter, and move us to a small West Coast town in the Western Cape. And that, in a sense, was the start of the Next Chapter. So it was partly about my own next chapter to try and live a more healthy life, and then also to start to focus our business in the Next Chapter around supporting women's leadership, women's influence, their well-being, as well as their transitions.
Right, in conversation with Shireen Motara, the founder and CEO of The Next Chapter, talking to us about her resilience, the importance of boosting women in any career and making sure that there's enough coaching and support for them. We'll get more stories from her after this.
The Money Show.
Shapeshifters.
And tonight we're in conversation with Shireen Motara, the founder and CEO of The Next Chapter, a company that deals with the leadership development support of women from all walks of life, advancing their personal, professional and team impact as well. Shireen, looking at some of the values that you hold dear, could you share some of those with us, those that have held you in good stead?
Well, I sometimes feel it sounds like a simple question, but it can be quite difficult. I've always been about community. community orientation is in my blood. And so I feel, as I say on my LinkedIn profile, I exist to make women's lives better. Integrity is a non-negotiable for me. And I find that, whilst we often say integrity, honesty, and so on, there are many of us, particularly in our political spaces and so on, that are, that use those words so loosely, but are totally disappointing us. And I feel because of that reason, it is more important for me to be showing integrity in the world and in what I do. And then solidarity with others, solidarity in supporting other women. So, for example, not just as my clients, but in my business, I focus on employing women that I can create opportunities for, that they can support their children, and also that I can build solidarity with others working for social justice, to strengthen their ability to do their work effectively.
Then just give us some of your best advices then to women that you help and through your coaching, because a lot of people are only, like you say, familiar with coaching when it comes to sports, but life coaching and career development, not so popular. So what are some of those gems that you can share with them on the show tonight?
Motheo, the one big thing that I'm learning as I am on my own journey, and I'm supporting many women on theirs, women of different generations and ages, is that whether I work with clients as leadership teams, whether I work with women as individual leaders of big organizations, of teams, or whether I work with women who are business owners, filmmakers, and so on, I find that women tend to suffer the same challenge ultimately, and that is lack of confidence in themselves. And I am trying to understand how that continues to happen, because women are liberated, women are educated, women have major professional achievements and so on. Yet women still question their abilities. They still feel they have to overwork in order to be recognized. And I think that there's something wrong with our system, that we continue to preach that, women can do all these things all the time. And, unfortunately, that creates a lot of pressure. We don't talk about how we make sure that we divide some of these roles amongst us. So we put these unrealistic expectations on women. And I find that even when women are doing well and succeeding, they are still lacking confidence in themselves. They have no self-belief. And I think for me, whatever coaching we may do, whether that's life coaching, professional coaching, business coaching, that is the issue that ultimately becomes the challenge. And we often work from a point of understanding self-awareness, and then being able to lead yourself first before you want to lead others. And we find that foundational work around understanding yourself and also taking good care of yourself, so making sure that you are taking action to be well, to sleep well, to eat well, and so on, to have that strong well-being foundation. For me, those are the primary things that I think is important for women to consider, when they embark on any coaching journey.
You wrote a book, Building Self-Love Practice. Tell us more about that.
It was more of an ebook. I've written a couple of ebooks, but what I have done with that was, and I think I did it during COVID, was I created in a sense, a toolkit for women during that time, and to be able to find ways of supporting their well-being. And that included using meditation, giving them journaling prompts, and also inspiring words and quotations that will help them through those difficult times. And during that time, I also had a kind of support group for women where we did these practices, because again, as much as people were saying we're at home and so on, it was quite overwhelming being at home as women, especially those who are single parents, who have children and so on, and work. And so I was just trying to provide some kind of respite, for women through the community that I have, to be able to support them.
I'm going to ask you another easy but difficult question. What's that book that you go back to every time to remind yourself of where you want to be and has gotten you throughout all these years?
I don't have a book. I mean, I read a lot, and I'm also part of a book club. But there's a quote that I have that I go to often, which is, "We see the world as we are, not as it is." Because I think for me as a coach, it is the foundation of where we go wrong with our expectations of life. That we think that this lens that we see the world through is the way the world is, but actually it is not that. And we have to be open to alternative perspectives, ideas, and values. We may not need to agree with others, but we need to be able to find mutually beneficial ways of coexisting.
That was our shapeshifter tonight, Shireen Motara, the founder and CEO of The Next Chapter, who believes life is to be lived and not endured. Thank you so much for joining us tonight.